after moving lower last week. We note the potential for high volatility in the gold market due to the numerous high-impact financial releases stemming from the US and other economies which are due to be released during the week. In this report, we aim to shed light on the catalysts driving gold's price and assess the future outlook. According to a report by the Financial Times, the retail price of gold in Japan had jumped to an all-time high last week, as the JPY has continued the descent against the dollar. According to the report, the recent gold buying spree has been attributed to the Japanese consumer, who may be looking for a hedge against inflation, as years of deflation have facilitated rising consumers' prices. As such, the fact that gold is not denominated in the Japanese won could also make the precious metal more appealing for the Japanese household, who may be worried that in the long run, the dollar may continue gaining against the JPY, and as such, they may see need to reduce the exposure to a weaker JPY. Therefore, given that gold is denominated in dollars and is widely considered to be a hedge against times of inflation, we may see a continued increase in demand from Japanese consumers. Lastly, should consumer worries continue to run high about the Bank of Japan's approach to monetary policy and the dollar continues to gain against the JPY, we may see a continued increase in demand for the precious metal from Japanese households in the long run, thus potentially supporting the price of gold. The Chinese central bank continued its gold acquisitions by adding 930,000 troy ounces, or approximately 29 tons, to its gold reserves during the month of August. The continued acquisition of the precious metal continues to drive speculation that China is intent on reducing its reliance on the dollar as apparent by its 10-month consecutive buying streak. According to data from Gold.org, China's total gold reserves now sit at 2,113.46 tons, edging closer and closer to overtaking Russia as the world's fifth largest holder of the precious metal. Furthermore, given the increasing tensions between China and the US, we may see the Chinese central bank continue its gold shopping spree well into the future. However, China's current economic woes could potentially result in a temporary pause or easing of gold purchases in order to redirect the bank's focus to more imminent economic concerns that may have to be addressed, such as the local debt faced by its province and their respective administrations. In conclusion, despite the apparent economic woes faced by China, we may see demand for the precious metals remaining elevated for the time being, and as such could lead to support for gold over the long term. Thank you for watching.